morning, Trinidad and Tobago. I hope your long weekend was a great one and welcome to the Bourse Report. Well, today we're going to take a look at some financial results across both the conglomerate and trading sector. And we're looking, of course, at the first quarter results of Ansa McAL, the Ansa McAL Group or AMCL, as well as Agostini Limited. Now, both groups would have reported different results. Let's take a look at what would have occurred in their fiscal reporting periods and what investors might expect in the coming months ahead. Turning firstly to Ansa McAL, for that first quarter ended March 2024, the group would have reported an earnings per share figure of 62 cents per share, a 5.1% increase from the 59 cents recorded in that prior comparable period, that is the first quarter of 2023. Revenues were up a fairly decent 3.4% from 1.59 billion to just about $1.65 billion. Operating profits up 4.1% from 164 million to just about 171 odd million dollars. Overall, profit for the period up 7.6% from 117.4 million to just about 126 odd million. So certainly, AMCL or the McAL Group, in terms of financial performance, heading in the right direction. When you take a look at profit before tax by segment for the group, we can see that there was some variations across business segments. However, overall, again, trending in a positive direction. The banking and insurance segment fell roughly 8% in that orange segment from 60 odd million to 55 million quarter over comparable quarter. Automotive trading and distribution also fell roughly about 8% from 38 odd million to 35 odd million, again, over the comparable first quarter periods of 23 and 24. Construction, manufacturing, packaging, and brewing, however, did increase a fairly significant 40-odd% from 66 million to just about 95 million in that first quarter period. A widening loss in the media services, retail, and parent company from a loss of 4 million in that first quarter of 2023 to 13 million in the first quarter of 2024. In terms of margins and profitability, profit-generating capabilities, well, the group continues to head in the right direction. When we compare its first quarter of 2023 to the first quarter of 2024, operating profits margins fairly stable, a modest increase from 10.3% in that first quarter of 2023 to 10.4% in the first quarter of 2024. Profit before tax margins, however, showing some significant improvement from 10% in that first quarter of 2023 to 10.5% in that first quarter of 2024. Still some way off those pre-COVID levels, where operating profit margins were just under 14%, and profit before tax margins were just around 13.6%. However, given the consistent and persistent inflationary pressures, at least the group is heading in the right direction in terms of stable to modestly improving profitability margins. So at a price of $59.25, AMCL stock is trading at a price-to-earnings ratio of 19.6 times, which is above the sector average of 14.1 times, and offers investors a dividend yield, a fairly consistent dividend yield in terms of absolute dividends paid, around 3% relative to that sector average of about 3.1%. So broadly in line with the sector average. So on the basis of resilient revenue growth, continued acquisitions, and geographical diversification, including their most recent foray into the Asian beverage space with their Globus Ansa Group joint venture initiative, stable dividend payments, but keeping an eye on those elevated valuations, Bourse is maintaining its market weight rating on AMCL for the time being. Turning quickly to Agostini Limited, well, for its fiscal half-year period ended March 2024, the group would have reported an earnings per share figure of $1.76 per share, a 55.2% decline from the $3.93 reported in that prior comparable period of 2023. Now, take this with a pinch of salt. There was a fairly significant one-off gain which would have been recorded in that fiscal half-year, well, that half-year period of 2023. When we take a look at revenues for Agostini's, it was up 7% from 2.4 billion to just about $2.57 billion. Operating profits fairly stable, a 0.4% increase from 268 million to just about 269 million. Overall, that net profit attributable to equity holders down that 55% from 271.6 million to just about 121.6 million. When we take a look at PBT by segment for Agostini's, the pharma and healthcare segment down from 104 to 98 odd million, a roughly 6% decline. Consumer products up from 127 to 130 in that blue segment, roughly a 2.3% increase. Of course, that energy, industrial, and holding segment down from 155 million. Again, this is where that one-off gain would have been reported in terms of segments, down to $10 million. So really a normalization in terms of profitability or profit before tax, given the absence of that one-off gain, which would have occurred in that half-year period of 2023. Again, as mentioned by the group, Agostini Limited, profits would have been relatively consistent with its prior comparable period, excluding that one-off gain. From a profitability or profit margin perspective, we can see that there was some headwinds to confront in terms of operating profit margins. It would have reduced in that pink segment from 11.2% to 10.5%. Of course, the PBT margin, which included the effects of that one-off gain, falling more significantly from 16.1% to 9.3%. So let's pay attention to that operating profit margin, relatively stable with a modest decline in period over comparable period. And from a valuation perspective for AGL, well, in the absence of that one-off gain, we can see that the group is or the stock is trading at a much more elevated price earnings ratio of 21.9 times, with earnings again excluding that one-off gain trending still positively if we would have adjusted that half-year fiscal 2023 to exclude that particular one-off gain. So at a price of $68.77. Agostini is trading at that 21.9 times price earnings ratio, above the sector average of 18 times, and offers investors a dividend yield of 2.2%, which is somewhat below the sector average of 3.3%. So with revenue growth in mind, however, keeping an eye on those lower margins, and of course, the impact of digesting some of those major acquisition activities or acquisitions that would have taken place over the past few years, and those relatively elevated valuations, Bourse is maintaining a market weight rating on Agostini Limited for the time being. Well, that's it for this week's edition. For more information, you can, of course, give us a call at 226-8773, email us at invest@boursefinancial.com, and of course, you can check out our website where all of our research is absolutely free at bourseinvestment.com, and you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until we see you again, stay safe, happy investing. This has been the Bourse Report.